Greetings and welcome to the Westwater Resources conference call. It is now my pleasure to introduce your host, Chris Jones, President and CEO of Westwater Resources. Thank you, Mr. Jones. You may begin.
Good afternoon, and thanks for spending time with us today. You'll note on page 2 of the presentation that we have cautionary statements. I invite them to read them at your leisure. And moving on to slide 3. Westwater is a green energy material developer. We're publicly listed, have been so for 25 years. We're a 40-year-old company. We are in the process now of developing a battery-ready graphite business in Alabama, scheduled for production in 2022. Now with the Vanadium discovery, and we'll talk a little bit more about that later. We're exploring for lithium in Nevada and Utah on 2 highly prospective properties. And we retain leverage to a rising uranium price with 2 licensed processing plants in Texas and 200,000 acres more or less of mineral rights and development properties in Texas and New Mexico. We have 5 million shares outstanding. Our share price on 4/9 was $1. Today we closed at about $1.24. We have around 234,000 options and warrants out there. Market cap of $5 million and cash equivalents as of February 12th of $1.6 million, and we're debt free. Our liquidity on a per day basis averages around 230,000 shares per day. Looking at our green asset portfolio, the Coosa Graphite project is really the shining star in our galaxy right now, with about 42,000 acres of mineral rights in Alabama. And now, once again, with the Vanadium discovery, it's the only battery-grade graphite mining project in the continental USA. And the United States has no current production of natural graphite. It's 100% imported from China. So why battery graphite? Well, battery graphite is all about batteries. It's all about transportation right now with lithium-ion batteries. The global electric vehicle market is projected to be half of the global market by 2040. That's a 25-fold increase from 2019. And the global transportation sector accounts for 23% of greenhouse gas emissions, accelerating demand for low-emission alternatives. Remember that you see a Tesla coming down the road. I see 800 pounds of batteries and 200 pounds of graphite, 100 pounds of lithium. Other energy storage, lead-acid batteries, alkaline power cells account for the remaining share of battery markets, and you should expect them to be at about 11% growth rate over the next several years. That energy storage, large grid storage batteries are an enabling technology for renewable sources like wind and solar. And consumer electronics like the laptop you may be looking at now or the phone in your pocket, demand growth will really be supported by smartphone, portable PC, and tablet battery demand. We expect about 3% growth rate, not because the number of devices is not going to grow, it's just they don't weigh very much and they don't really represent a giant source of battery and therefore graphite consumption. Graphite is a critical component of all types of batteries, lead-acid, alkaline power cells as we talked about, non-rechargeable lithium cells. Coated spherical graphite is a critical component in lithium-ion batteries. And so when we talk about transportation batteries and those 200 pounds in an electric car, that is coated spherical graphite. The U.S. government has defined graphite as critical to the nation's security and prosperity. Remember that 90% of all graphite for batteries comes from China or more. And recent supply chain interruptions demonstrate how fragile the international ecosystem is. The Coosa Graphite project is the only near-term source of domestic U.S. natural graphite. Our pilot plant design work is underway right now. Customer qualification work is underway right now. And a recent 1-ton bulk sample order was announced, speaking directly to the success of our product in the marketplace. Westwater's graphite will be produced using environmentally sustainable processes here in the United States. And our vanadium discovery at Coosa can be an enhancement to the project's already great economics. The three products we intend to make, and by which we intend to make, we already make them in the lab. We're talking about making them at the production level. Our Ultra PMG product is purified micronized graphite. This material goes into lead acid and alkaline power cells, for instance, as well as other batteries. Our DexDG, which is delaminated expanded graphite, this is a conductivity improvement material for batteries. And the target markets are much the same as our PMG material. CSPG is a little bit more special. It goes into the anode of the lithium-ion batteries, and we roll up small flakes of graphite and coat them with materials like hard carbon so that they can be packed into these batteries and allow the battery to operate. On slide 10, we show a battery graphite process flow sheet. Know this, that we take 95 to 98% pure graphite concentrate, a long-term supply contract for which we already have in hand. We purify that material and then we size it and shape it. More on that as you look at our business plan located on our website, www.westwaterresources.net. The business plan for Coosa is simply to manufacture material at the end of this year through a pilot plant. We expect to make 12.5 tons of a product mix we can then send to prospective customers for pre-qualification testing. That happens in the fourth quarter of this year. And together with our partner, Dorfner Anzaplan, we are on plan and on budget, even in the face of the health crisis currently going on globally. Full-scale production is expected on purchased feedstock in 2022, producing battery graphite. And Westwater expects to begin mining the Coosa graphite project in 2028. Again, the reason we can do that is we have a source of graphite already secured for the period between now and then. The project economics are basically $54.5 million of project capex, concentrated mostly in the years 2021 and 2022 as we finish the design, procure long-term lead items, and then construct the facility over the back half of 2021 and all of 2022 and start it up. The first year of positive cash flow, it begins in 2022, and our first full year of positive cash flow is 2023. The NPV is expected to be $481 million at an 8% discount rate, and our internal rate of return is at 41%. Vanadium development can enhance these economics. And remember that we have only just discovered vanadium on that property, and we'll talk a little bit more about that later. We are considering equity, project-level debt, and joint venture structures for financing. On to our lithium projects. On slide 14, you see a map showing our Columbus Basin and Salrica projects in Nevada and Utah, respectively. At Columbus Basin, we have around 14,000 acres of mineral rights, and the water rights are owned by Westwater. That includes most all of that basin. So if anybody else comes to and makes a discovery in that basin, they have to come to us to mine. Phase 1 drilling program is already complete. Phase 2 drilling is planned under plan right now. Salrica, at 13,000 acres, already has good road and power access. We already have samples in the 100 ppm range from shallow aquifers. And again, we own the water rights for that project. On to our uranium portfolio. We have 2 licensed processing facilities. The President's Working Group recommends government purchases for a strategic stockpile and look for an announcement on that very thing over the course of April 23rd, 4th, and 5th by us and other mining companies. Development properties are also held in New Mexico and Texas. The President's fiscal year 2021 budget requests $1.5 billion over 10 years to create a strategic stockpile recommended by the Working Group. The likely outcome is price increases for uranium here in the United States. The U.S. relies heavily on nuclear power for carbon-free baseload power, and more than 20% of all uranium produced in the world is consumed here in the United States. Nuclear power represents the only baseload solution for global electric power growth, driven by economic expansion and a focus on carbon reduction. On to vanadium. Independent lab results demonstrated a widespread distribution of vanadium mineralization through the central portion of the Coosa project. The vanadium comes with the graphite. Exploration is planned. Recent assay results indicate values from 0.15 to 0.4% V2O5. With vanadium values in this range, once confirmed by further explanation, can have a very positive impact on the Coosa project's economics through byproduct sales. With steel markets providing a baseload demand for vanadium and increased use in electrical energy storage system, demand is expected to rise. You see a piece of rebar. 1 ton of that material has 2 pounds of vanadium in it. Prices for V2O5 are presently $5 to $6 a pound, and future prospects for increased vanadium demand can be expected to drive pricing. Again, vanadium byproduct sales can enhance Coosa economics once we understand the science of extraction. Our team are experienced, tenured leaders in energy minerals development. I've been in the business for more than 35 years. I've been in the coal, gold, silver, molybdenum, oil sands, and other businesses, and have seen projects from startup through production. Jeff Vigil comes to us from the manufacturing, the coal, and the uranium sectors. Dean McCoy, a graduate of the Colorado School of Mines, has been our man on the ground in Texas since 2004, is presently VP Ops, and he is also in charge of our graphite business. WWR is the founder of SRK Ankara, and with 30 years of Turkish, U.S. mining and environmental experience, is a valuable member of our team as VP Tech. And John Lawrence, again with more than 30 years of experience in law and licensing across the nuclear fuel cycle, is a valuable member as well, and he's acting as our general counsel now. Bottom line is experience counts, and a demonstrated history by management. Energy minerals exploration and development is a process that requires discipline and diligent capital stewardship. This team has restructured and recapitalized the company over the past several years, positioning Westwater as a diversified energy materials company. This experienced management team, with a demonstrated history of developing mineral properties from concept to production, has been intact for most of the last 7 to 8 years. A proactive M&A program has helped reposition Westwater's uranium asset base around low production cost assets, selling non-core uranium properties, and redeploying capital to cost-effectively expand resource base into lithium and graphite. We benefit from strong fundamental market drivers. We continue to expand our portfolio in green energy materials, leverage to the battery materials sector with the Coosa Graphite project in Alabama and 2 lithium exploration projects in the western U.S., leverage to rising uranium prices with one of the largest uranium mineralization bases in the United States and 2 licensed uranium processing facilities in Texas. Pending U.S. government recommendations on uranium purchases provides upside for U.S. producers and developers. And our new vanadium discovery at Coosa has the potential to provide entry into steel markets. And once again, we're debt-free. Westwater will purchase concentrated graphite from a third party for processing in our commercial plant in 2022. And remember, that contract is already in place. We have a strong asset portfolio with asset potential. Electric cars and buses are forecasted to grow at a 23% compound annual growth rate. We are a proven management team with experience in energy minerals development and financial management, and you should expect catalysts throughout 2020. We are on plan with our graphite development as we speak, and you should expect further milestones throughout this year. Exploration and water rights milestone achievement on our lithium projects and vanadium exploration results. I want to thank you for spending your time with us, And with that, I turn it back over to our host.
This concludes today's webcast. You may disconnect at this time. Thank you for your participation.